So we're looking at how to barcode an entry. So welcome to the bloodbath. If you don't know what the bloodbath is, it simply means the markets. This is where traders get killed, right? Simply because it's a competition between buyers and sellers. And if you actually look into the order flows and how the markets actually work, you'd be terrified, right? But if you know how to trade the markets, you know what is important and all these nice beneficiaries. When you start to trade, you start to see things in an algorithmic pattern, and you start to, you have tools that allow you to see the things that many people don't see. You become something that people aren't aware of, right? So first of all, when how to barcode an entry, you need to understand the two words: pip value. What I mean when I say pip value is means you need to understand that 10 pips is equals to, with a standard lot size, is equal to $100, right? So if you're coming in, right, with at this level with $500 and you're going lot size 5, right, meaning if it touches this level right here, you lost $500. Touches this level, you've made approximately $1,500, right? So that's simple maths if you are aware, right? So another thing about pip value that we don't understand, when it also comes very handy when you're talking about barcoding, because what we don't understand is that we think we can use this area, right, and we're just going to enter multiple entries, right? What happens when you're entering multiple entries is that you enter once, twice, 3 times, 4 times, 5 times, whatever the case is, you're entering around about here, right? Majority of your entries here are not going to have a problem, but you enter until here. That's your goal, right? And you're thinking that the market will just shoot, but now the market comes back a little bit up and it takes out your account. Now you're down 500 and you are right about the direction. So when we're talking about barcoding, we don't care about necessarily the direction. We need to have the direction beforehand. Barcoding in itself is a skill set, right? So you need also, by the way, as I've said, you also need one account and you're willing to lose everything in that account. That's barcoding. If you come into barcoding and with the belief that you can use it on a big account, I've tried it, it doesn't necessarily work, because what happens is that you enter, hypothetically you enter, right? What happened to me is that I entered and I was risking approximately $650, if I remember correctly. I was risking $650, and then what happened is that the market was opening and I was opening trades. Next thing I know, I was up 4,500 USD. So I'm like, okay, this is cool. I'm still going through my take profit, right? So I'm gonna wait. I stopped adding trades, which is a good thing, because I'll explain it soon. The market now touched a certain level that I wasn't aware of and started to push to the upside, right? But because now my psychology is fixed, I don't close trades or anything, the market kept on pushing to the upside. It was a sell. The market kept on pushing and pushing and pushing. It was a trade. It kept on pushing and pushing and pushing. And what happened was that now the market was at the first entry, and now I'm holding minus 3,000. You understand the logic in that? And now I'm holding minus 3,000, and the initial risk was 650. So it's always very, very important to put in, because you can open multiple accounts. As you know, you can open multiple accounts with different brokers and everyone in between. You can just do whatever you need to do, right? So open a different account, put in a certain amount of money that you're willing to lose with whatever, right? Understand pip value, so that if you're risking 20 pips, you understand how much your lot size should be, right? And you're going to enter it smartly, which means you're going to enter 1, 2, 3, 4, 5, right? You're gonna know how many trades it's gonna take, 5 trades to enter in this area right here, right? So what happens now is that every time your stop area, it doesn't just shoot or it doesn't go haywire based on, because if the market lingers in this area, right, what happens is that you're gonna add more trades in this area. That's what happens if you don't know the skill, right? So if you're going to add more trades and then the market pushes back, you're going to lose again. So you need to think of it in a pip value system, like mentality, right? So you're going to enter at certain points along this area, right? So when the market touches this area, when the market touches here and starts to come back, your stop loss has been moving in such a way that it's not necessarily your stop loss, but like the amount of money that you take, the amount of pips it will take for you to grow your account is moving in a pattern. It's not just you understand, it's moving in a pattern. So what happens is that when the market starts to move in a pattern, when your account starts moving in a pattern, it comes to this area, you're still safe. It comes back, you start adding again more trades, and then and then once you enter your last trade, you hold it. The market comes back, you won't be in a negative because these positions are holding, are supporting, right? And then by the time the market reaches this level, you would have made 5 times, 10 times, 8 times, possibly even 12 times the amount, or even there was, in extreme cases, you can even make 30 times to 50 times the amount, right? It's the knowledge. For example, that if you're a trader and you entered this area right here, and you kept on entering right here and here and here and here, you kept on entering, when the market comes back, you see that the direction is right. The direction is right, it's going to the upside. But because you entered without the knowledge, the pip values and everything, you didn't know these things, what happened is that when the market came back down, it kicked your position out. You became retail, you became collateral, your money became my money, or went to an institution. Because you need to also understand that institutions are not dumb. They are not dumb, right? So you need to, and for them not to be dumb, they work in a system, they work in a pattern, right? So I'm not saying that they work with charting patterns, they work with patterns as in how a person thinks. Meaning, if I enter if a person comes in and understands that the direction here is a sell, and they enter, no drawdown, more likely they're going to enter again. It's almost a guarantee. People can't comprehend the fact that, it's not like they can't comprehend, but they don't understand that in the markets, the market can come back and like bite you, right? Because they're used to entering around here, the market pushes a little bit and then comes back, then that's a good trade for them, right? Then they're like, oh, then they hit their take profit, right? They used to enter, but they enter right on this level and the market keeps going down. What happens is the market goes down, they enter again right here, they enter again right here, because the number one, they don't understand pip value or barcoding or whatever. They enter right here. And if you're gonna look at systems and all these weird trading things, you might find that this candlestick right now indicates for a sell. So now you're entering very harshly at this area at the close of this candle. You've entered perfectly right there. You could have just held it and then took your profits, but you're going to enter more trades right here, because number one thing that the retail traders do is have too many confirmations. A professional trader has a few confirmations. I have 3, right? I know the fundamentals, which means what the news are saying about the things I am trading. Number 2, I have my system, my trading system. The trading system helps me understand, okay, this position I'm going to add trades, at this position I'm going to not add trades, what is happening, trade and trade. And I have a background in understanding in-depth supply and demand, which means I understand that at certain levels a change of structure, at certain levels break of structure, at change of character, the certain points are points of interest. You know, I'm aware of these things. Although I don't take them as seriously now, simply because I've noticed that many retailers are going into that field. So I was like, why go into a field where many retailers are going? Eventually, over time, it's gonna catch up. It's gonna be a good thing for the first 2-3 years, because price action, the basic one, the one that is losing today, was a great thing 2 years, 3 years ago. I was there, I know, right? So even 2 years, 3 years ago, I'm counting now. I mean, like a while ago, 6-7 years ago, 2 years, 3 years ago, it was just became popular, but it was there, right? So that's how you barcode. You understand pip value. So you're gonna enter at specific points. So you're gonna understand the word, okay, round about here, there are trades open and whatever, right? There's this area right here, there's this area right here, right? You can use the Fibonacci to understand which points you're adding. So you can add the 25%, 50%, 75%, and the 100%, right? Or the 20%, the 40%, the 60%, the 80%, and the 100%. You know, just enter on a pattern so that you can also understand when the market hits you with a loss, that you can see what happened. You're not just going to assume that barcoding is bad or whatever the case is. So you know what is happening. You need to be always conscious as a trader. You need to be always conscious. And I can't explain that enough, that consciousness is a real thing when it comes to trading, because you need to know what is happening. So that's it for this video.